Hello everyone and welcome to the JET eTalks. I'm Alice, the project manager of the talks, and I'm happy to inaugurate this series of brand new events about entrepreneurship. But before they start, let me give you a brief introduction about this brand new format. So the JET Entrepreneurship Talks are based on the TEDx format, as they are a 15-minute inspirational speeches. And then you will have the chance to ask a few questions, as we will have about 10 minutes for questions and answers. But now let's get started the session of today. So thank you, Alessandro, for being here. We can't wait to listen to you.
Thank you, Alice, and thank you, of course, to the whole JET ESCP team for having me here. It's a pleasure, of course, to spend these 30 minutes with you. So I've been asked by Alice and by the team to focus my intervention on the topic on which are the main signals or the main elements, the main metrics we look for at Endeavor when checking for a startup or a company with a potential to becoming a unicorn or a very successful company, either in its own ecosystem or globally. And today I'm going to briefly introduce you to which are the main dimensions we actually study, evaluate, think about when meeting an entrepreneur in order to deciding whether to select him or not into our own organization. Just to provide you with a very brief introduction on how Endeavor works in this sense. We are a global organization present in 37 countries. We do have over 1,200 companies in our portfolio. In each and every sector, at more or less each and every dimension, even if we focus mainly on scale-ups, so companies which in American terms have revenues of above $5 million, and of course like very, very rapid growth patterns, even in revenues and in terms of employees, in terms of expansion globally, as well as SMEs, which are more mature companies, which are already present and maturing in their own countries, in their own markets, but see, denote some kind of potential of being disrupted internally, either because there is somebody else at the helm, a new generation of entrepreneurs, or there are some key elements that enable us to think that these companies will be growing tons and tons more in the upcoming future. And starting from this, this very huge portfolio in which we do have the chance of having already more than 150 unicorns, we have, of course, evaluated with the unicorns themselves the dimensions which led them to become so huge, so successful, so big. And here, of course, like to motivate with you the ones I feel are the most important and the most impressive, either because like you may want to have them from the very beginning if you want to start your own company, or because as an investor you would like to check them in order to make good investments and provide a huge return to your investors. These dimensions are dealing with the team, the financial pattern of the company, the profile type of the company itself in terms of which kind of innovation or business disruption they involve, as well as the involvement of its external stakeholders in the company. So normally the first mistake which I tend to run into when I speak with other fellow investors is the fact that they normally start from the financials, okay? So what they do is checking the revenues, is checking the EBITDA of a company, how much these are growing, and so on and so forth. Now our analysis tells us that basically these are probably the least important elements to take into account. First, of course, because the companies we normally deal with are either very young, so they have less than 5 years of existence, normally even less than 3. So the financial pattern you see simply doesn't make tons of sense because there is no historical data or not enough historical data in order to evaluate how the things will go on. And secondly, because these kind of companies normally tend to, tell you that their projections for the future are extremely, extremely ambitious. So they will grow 10x in, I don't know, 5 years or something like this, without normally providing you with the solid assumptions which you should take into account in order to check whether this is possible. Forget so the financials from the very beginning. If you have to check something, is EBITDA at the end of the day, which you normally would think is negative in young companies. But in reality, depends of course on the sector, on the industry, on how the company interacts with the market, on the market itself. So of course, like each and every country is different from the others. But what we have seen is that usually companies which introduce very disruptive business models, say payment companies, ride-hailing companies, delivery companies, stuff like this. So in which the innovation is in how they provide a service, how they provide a good to their customers, and not into the nature of the good or the service itself. If the successful ones tend to have a negative EBITDA when they're young companies, but not so negative. Like normally these companies tend to have less than 2 million in negative EBITDA, in euros in this case, when we first get to meet the entrepreneur, which means that of course, like first that of course they are very diligent and disciplined inside the company, because they managed of course like to reduce the amount of costs they had, or to maximize the ratio revenue costs in order to have a negative EBITDA, okay, but this is negative because they needed it to grow as much as they managed to do up until that very moment. And secondly, because if you have a company which is growing a lot, but the EBITDA is negative at least as much as how the revenues are growing, what we normally say in venture capital lingo is that this company is raising money in order to buy their own customers, okay? So if you raise 10 millions and your EBITDA gets 10 millions negative, it means that you spend 10 millions in marketing, in promotions, and of course, like you attracted more customers, more growth, but eventually this is not sustainable for the company. So the first pattern is EBITDA negative less than 2 millions, or, and this is the best, of course, like if you can, meet up companies with this pattern, the top would be companies which manage to bootstrap and are EBITDA positive when you meet them. So companies that are so good in terms of revenue cost structures, discipline, allocation of money, and so on and so forth, that manage to be EBITDA positive. So this is for the financials. Let's leave them aside, because again, this is normally not the first thing you should take into account. The first one is the team, usually, no? So the most important one we have seen is the nature of the team, especially the founding team, of course. What we normally say is that the best would be about 3 people. 2 people is not enough, 4 people is too much. Like this is what we normally say. And usually these 3 people have, of course, like complementary backgrounds. So you have someone who is really good at management. Normally this guy becomes the CEO. Somebody who is really good with the technology, the CTO or the product manager, depending on the company, and somebody who is really good at relations with stakeholders. So able to attract funding, able to attract customers, able to do this kind of soft side of the story, which is extremely important from the very beginning. Why is so important? Because of course, good people tend to attract good people, which is something which is really undervalued, especially in the Italian ecosystem. For instance, if you check 2 of the most successful scale-ups in the Italian environment right now, which are Benny Spoons and Casavo, we do have Bending in our own portfolio. Both of them are great places to work, so are in the list of the top 10 companies to work for in Italy right now. Why so? Because from the very beginning they started, designing the organizational structure in order to attract the best talent possible. And this, of course, enabled them to become what they are right now, both in terms of dimensions and in terms of success and validation from our customers. So talent is the first. Talent is also the main pain point of the companies we deal with, simply because you may know it from your university experience. What normally happens is that the best talent at the university level tends to go to a bunch of companies, normally 20, 25 companies, very renowned, either in management consulting or in finance or tech companies, but always the same 20, 25. And it's very, very tough from the others to attract the best people available. No? That's why, again, this is for Europe at least. Like in the US, it's a bit different because culturally speaking, of course, like they tend to relate more with the opportunity of a new company, of a new venture and so on. But in Europe, what we see is that talent is the #1 pain point for each and every company. So what happens here is that, of course, like the good founders tend, of course, like to design, as I said, the organizational structure in a way which enables it to self-replicate. So this enables them to have a non-costly or like a positive return hiring procedure, because they tend to get in touch immediately with the best people, which attract again the best people, who attract the best investors and the best network and so on. So in terms of good externalities, this is the best thing you can check. Instead, which is some kind of a myth, which I think should be dismantled, there's no correlation between being a unicorn founder and a serial entrepreneur, for instance. So you may be very successful. So I don't know, you have founded, say, 5 companies, and each of them went well, you sold some of them and so on. But if you want to build a very, very successful company, there is no real correlation between the ones you managed to create in the past and the real company you're working on at the time of the encounter, of the meeting. Thirdly, which I think is also extremely important, is the kind of people who like to work with you. Either investors, as I said, stakeholders in general, so either investors mainly, advisors, incubators, these kind of people normally tend to be sort of a validation dimension for other people. Say, if I'm an investor and I see that, like, in your cap table, you already have some of the top-notch VC funds in the world, of course, I tend to be more proactive in getting in touch with you, more attentive in dealing with you as an entrepreneur, and I see you as an opportunity which I have to catch as soon as possible, because otherwise either I get a lower return, or I get diluted, or whatever. In fact, what we see is that the money is never a problem in this sense. Like, successful companies, of course, like, tend to have no money problem, but the kind of money they attract is really important. So it's completely different to attract 50 millions from an unknown venture capital fund, or even way less from, say, Sequoia and Horowitz, one of the top funds worldwide, because of this validation procedure. Same happens, of course, with individual investors. Like, if you have in your cap table very renowned managers, or other entrepreneurs and so on, it's very validating. For instance, like one of the funds of one of the companies we invested in, Satispay, recently featured a very interesting cap table in this sense. Sorry for that one. Wait a second. You're right. So a very interesting cap table in that sense, because it featured a mix of these kind of investors. It featured Tencent, for instance, which is a Chinese investor, which normally invests worldwide in very big rounds, over 100 million rounds. They featured Jack Dorsey via Square. Jack Dorsey is a serial entrepreneur, founder of Twitter, founder of Square itself. So it's extremely validated as a round. No? And you normally tend to see this is, of course, a potential unicorn and a wannabe unicorn, because you have seen already this kind of pattern in attracting the best stakeholders available. And these are, of course, like the best you can get, the best you can catch. And finally, which is something kind of paradoxical, what we tend to see is that in general, like you do have companies who, for even generations, like tended to be sidelined. Here I'm talking about not startups, of course, SMEs mainly, or like very established companies, which abruptly completely change their business model and become extremely attractive for investors, normally private equity investors at this point. But we know, in a way which is related normally to either a generational shift, so a new generation of family members, or like managers who create a discontinuity in the way the company is managed and it grows, or with the creation of a new market in which the existing company benefits without having planned of doing so. So for instance, like, I don't know, a startup disrupts an existing market, and a very established company benefits from it as well, because the new goods or the new services offered by this market are appealing also for this established company. and these are the kind of patterns normally we tend to deal with, we tend to check, and this is mainly like the dimensions I see as the most interesting, as the most important. Now, since I think that there is time for the Q&A, I will go into that. Of course, I could also tackle my own professional experience, if you wish, or like my whatever. Like I'm prone to any question. And sorry for the telephone ringing. Like I couldn't control it. Like,
no worry, Alessandro. Thank you a lot. Really, it was really interesting from my side to listen your suggestion about choosing the right team. I mean, it's a thing that maybe is under considered, and people tend to consider more technical aspects for the success of a startup or an enterprise. Yeah, but I think that it's really essential. From my side, I have a questions, but since we will have about 15 minutes of questions, I would say that if some people from the public have questions, they go first, and later I can ask mine, so that I don't take a lot of time. So feel free even to activate your microphone or to write it in the chat.
Hello, Alessandro. I'm Clara. I have a question. So you talked about the importance of having this right team of 3 people and with managerial experiences and so on. But what about the importance of having a CTO, since nowadays everything is becoming digital? Do you think it would be the most important thing to have it right now since the beginning, before founding the startup, or finding it later, or outsource this to an agency? How do you think we should proceed?
yeah, so thanks for the question, which is really compelling. Like in my view, the CTO at the end is one of the most important assets you have as a company, especially right now. Of course, again, it depends on the industry, depends on your business model, but in general, is one of the key people you should care about. Indeed, actually, when I speak with the HR managers or the people managers in my portfolio companies, normally they tend to tell me, you know, the first person I care about or I want to make him happy is the CTO. Like then the rest comes because the other people are easier to be substituted. So definitely it's better to have a CTO in-house, but even better to have him among the founders. I would never outsource the CTO at all, like because what I see is here a potential risk of mismatch in terms of incentives and in terms of interests, because of course, like if you outsource this kind of function, you never know what really happens in the other company you externalize it to, and also of course, like you have again a disalignment in terms of what these people are looking for and versus what you're looking for, what are your main priorities. So I would probably never do
that. Yeah, I would have another question. I think it's almost on the same topic. And first of all, thank you, Alessandro, for the interesting speech. You made an interesting point about how hard it is to attract talents, and especially, I don't know, in Europe, you made this distinction. But is there something that you noticed in, I don't know, successful unicorns or like company that proved to be successful afterwards in their strategy to attract talent and to take them from those 25 or like bigger companies that generally have them or manage to get them?
Super nice question. Thank you, Lina. There are 2 problems here with the attraction of talent. Like the first one, this is actually one of those questions I normally pose to the entrepreneurs I interview with, which is, how did you manage to attract the first employee? Because at the very beginning, nobody knows you as a company. Normally know you as a person, but don't know you as a potential project or experiment or company. So how did you manage to attract this kind of talent from the very beginning? And this tells you really a lot about how to sell very well their own idea to potential stakeholders, as I said, among which, of course, there is talent. There are future employees, current employees, depending on the size of the organization. And the problem is, of course, like, again, how talent perceives this opportunity. And this is really a lot related with the culture of the country or the background of the talent you tend to want to attract. And even here, paradoxically, like more technical positions, like the CTO team, software developers, data analysis people, scientists, and so on, tend to have less attachment to specific companies and tend to see the good part of the opportunity. So paradoxically are easier to attract. The problem with this kind of talent is that there is not enough talent for everybody. So, and everybody, of course, wants to get to the same talent pool. While for more soft skills-based roles, like the managerial roles, for instance, or the you know, the marketing roles, the product roles, the sales roles, and so on, there is a real problem here in attracting the best talent because of the point I made at the very beginning. So because normally this kind of talent pool people tend to be attracted by other kind of opportunities when they get out of uni or compared to what they have done in the past. So it's very tough to attract this kind of people. The second point you made, which is extremely important, is this shift you have in a company like this, so in a potential unicorn, in the phase in which they grow above the 50 employee mark. Because at that point, the problem with attraction of talent is also matched with the problem of retention. You have two things to worry about. The first one is, how do you manage to get the same level of talent as you managed to do in the past? So with the first 50 employees, if you have to hire 10, 20, 30 people per year instead of, I don't know, 5 or 10 as you made in the past. And in some cases, what you've seen is even much more than that. So like hundreds of people in a year. Because of course, like the problem there is in terms of enrolling, empowerment of these people, motivation, even just to, you know, to explain them what you're doing, who you are, who they have to relate with, who they are reporting to, and so on. And the other problem is, of course, retention, because the first 50 people, when they see that there is a dilution of talent because of how tough it is to get as many people as you need with the same level of skills, tend to get, you know, the incentive of escaping from the company, which is normally when stock options get into the equation. Because like at the very beginning, stock options don't really count at all, a lot. They are a nice incentive for the first, say, 50 employees. But is after you scale up to a certain point in terms of organization, that they become really something to negotiate about in terms of compensation. And normally it is because of this retention issue, which I try to explain right now. I don't know if this answers your question.
Yes, yeah, thank you.
Instead, I'm still having one question, so maybe I can ask mine. Okay, I'm interested on what is your favorite part of your job as an entrepreneur selector? I mean, what do you like of what you do?
The learning curve, mainly, because like, of course, like the good part of being exposed to so many entrepreneurs and dealing with them on a daily basis, mostly, is that you tend to learn tons of things by osmosis, no? Which makes you even more accurate and better in the job you're doing with the others. So the good part, of course, is the fact that this is kind of a network effect in which you tend to get a best practice for somebody, try to apply it to another company, you know, identify a mistake in a case and try not to make it in another case, and so on. Which, if you scale it on a global level, is even more interesting, because like one of the good things we have is the opportunity of working also for companies abroad, if you want to spend some time in the company with the entrepreneurs, so working hand in hand for a period. So for instance, personally, I went to Chile last year doing this. And if you mix up the two things, you get a really an extremely steep learning curve in which you really feel you can improve on a daily basis and offer even a better service, a better support to the entrepreneurs you're dealing with.
Okay, so Alessandro, I would really thank you for your availability and thank you for giving us this opportunity. As for us students, it's really important to interact with the professional world and to get to know these precious insights. So I would say let's hope to host you in another event maybe in future. And thank you a lot.
Thank you, everybody. Thank you, Alice.